We cross over now to Nigeria, Lagos now, for a look at how the markets have performed. The all-share index closed down by 0.27% to stand at 33,207.2. On the currency front, we saw the Naira go the Naira depreciate 158.8. And now let's head over to Lagos, where we have Rotimi Fakayejo, who's the MD of Enterprise Capital Partners, to get some detail on the day's trade. Rotimi, it's very good to have you on the show today.
Yeah, it's good. Good evening, Didi.
Great. Now let's start by discussing the performance today. We saw a drop in the index, and one gets the impression now that investors are getting increasingly anxious, obviously because of the lateness that we've seen in company results. Do you agree?
Yes, I agree fully with you. But be that as it may, we still saw a good volume today of about 314 million. A turnover of about 3.3 billion naira, though the index closed at 33,207, but at the same time, I think the market still did well, in spite of the loss of about 0.28%. There is so much apprehension about the late coming of the results, because the post-listing requirements ensures that companies turn in their results at the 90 days after the end of their financial year. But up to now, we've seen very few, as in Nestle and Nigerian breweries. But there is none of the financial banking sector stocks that has released their results. So it's a lot of apprehension in the market, and investors are taking it coolly.
Okay, now let's take a look at what's a comment that the CBN governor made yesterday. He, of course, made mentions of the gains that we've seen in the equities market. However, he did say that that was largely due to hot money from foreign investors. Now, we know that foreign transactions in the NSE have exceeded 50% of total deals since 2010. Do you think the authorities need to do anything to mitigate the downside risk to the equity market in the event of a reversal of inflows?
Yes, there is going to be serious impact on the market should there be a reversal of flow out of Nigeria. We've seen that money create a lot of positive impact on the market. We've seen the index move significantly since the inflow started at the end of fourth quarter of last year, and that actually had a lot of positive impact on the market. But going forward, because there is an free exit and free entry and free exit of such funds, should there be a reversal at any point in time, it's going to deal a devastating blow on the Nigerian market. And I think the only way that this can be mitigated is if peradventure we have a situation whereby there is more local participation, which will be able to checkmate this at any point in time. But be that as it may, for now, the situation that we are in is such that there is no way such fund will flow out of Nigeria without creating a big hole in our market.
Now, moving on, I'd like to focus on the news that I heard today that said that the NSE has ordered operators in the Nigerian capital market to stop a daily distribution of capital market information to clients. Now, talk us through what's going on. I mean, a lot of investors rely on this information that they receive daily, and I mean, if they're not going to be getting this information, do you feel like this could have some negative effect in the short term, especially as we're trying to draw in local investors back to the market?
Well, for what is said by the management of the NSE today concerning the data available from the capital market by way of price list to capital market operators, which they freely get for now. And the stoppage of that is definitely going to deal a negative impact on the market, because every day most clients will log on to the website of their various stockbroking firms, and they will see the performance of the market for that day. And this always brings about a good decision for them to prepare for the next day. But in the absence of this, whereby stockbrokers will have to buy such data from the stock exchange, And I believe strongly that a lot of them, because of the cost, may not want to do that. So at the end of the day, we're going to have a situation whereby such information may not be available on the website of most stockbroking firms. And I think definitely this is going to reduce clients' participation in the local market.
Now, as you mentioned, of course, we're expecting the release of results from the banks. There's talk that we might see some results from the likes of GTB, maybe Unity Bank this week. It would be great to have your expectation for dividend payments in this earnings season and the type of yields that investors should expect.
Well, we've seen a couple of results in the likes of Nestle Foods and Nigerian breweries, giving out as little as about, giving a dividend yield of about 1.8% in each of those cases. But I want to assure that from what we've seen in the third quarter results of the financial services sector stocks, we are definitely going to have it much better coming that way. And I think by the time those results come out, we will see an average of about 6% dividend yield coming from each of these banks. And I think that will definitely reassure investors of the continuity in getting a reasonable return on their investment vis-a-vis stocks in the financial services sector. So, and I think maybe with the way it is now, there is an urgent need for those results to be out quickly, so that we will see life come back to the market. Because now the market is sort of down in terms of activity, and a lot of people are just trying to stay a while and see what is going to happen next before they put their money in any of the stocks. So we are seeing this doldrum in the market for now, and I believe by the time we get at least one of the results that is very good, then definitely there is going to be a turnaround in the market, and we're going to see the index going higher than what we have for now.